Welcome to the Quarter 3 Excess Select Guarded Fund of Funds commentary. The Select Guarded Fund of Funds falls into the low equity prudential asset class, which can hold up to 40% in equities. The fund aims to achieve inflation plus 3 over a rolling 3-year period and is managed according to Regulation 28 and can hence take prudential and retirement monies. At the end of Q3, the fund was still a 4-way split between 3 active managers, being Coronation, FoF and Prudential, as well as a single low-cost passive fund managed by Tequanta. As of the 1st of October 2018, the Allan Gray Stable Fund will be added into the mix, initially with a weight of 10%. If we look at the asset allocation of the fund, we shall see that total equity exposure is at approximately 37%, which is close to the maximum allowed for funds within this category, which is set at 40%. Domestic asset allocation remains biased to Rand hedge stocks, with Rand hedge stocks being companies that are listed in South Africa, but where more than 50% of their revenue is generated from outside of our borders. The effective offshore holdings within the fund is thus sitting at approximately 38%, made up of 25% direct offshore, along with the 13% in South African Rand hedge stocks. The R186 bond is our largest holding by far within the portfolio. This fund is held by FoF in the Nedgroup Investments stable fund. It offers a real yield over inflation of around about 4% at an acceptable level of duration risk, which is the bond's sensitivity to interest rate movements. If we look at the performance of the fund over the last quarter, we see that the fund was up 1.5% versus the peer groups that was up 1.6%. The fund of fund maintains its second quartile ranking over the recommended time horizon of 3 years. If we look at the 3-year annualized figure, we shall see that the fund has achieved a return of 6.2% versus the peer group of 6%. Over all calendar years, barring 2016, the fund has managed to outperform the peer group within the category that the fund is classified. What caused a drag in performance in 2016 was being caught on the wrong side of the Brexit vote. The fund was positioned more for a vote to stay within the European Union, and when this did not occur, certain specific UK-based companies, particularly in the property sector like Capital and Counties, took a dramatic hit which affected the performance of our offshore holdings. Looking at the risk measures since inception over the fund, we see quite a good story occurring. First of all, our volatility within the fund at 4.6% is about a third of the South African equity market's volatility as measured by 14.5% volatility. We also place a lot of importance on choosing managers that focus on downside protection, and we can see that the maximum drawdown of the fund at negative 4.5% is materially less than the South African market maximum drawdown of minus 40.4% over the same time period. 74% of the time, the fund has given a positive monthly return since the fund's inception. We can also see from the rolling 3-year graph that the fund has consistently, over its rolling 3-year time horizons, been ahead of the peer group. Finally, on the histogram graph on the right-hand side, we see that the fund is very positively skewed towards achieving positive monthly returns, with the vast majority of returns of the fund sitting somewhere between 0 and 3% per month over the period. Looking at the underlying fund performance, we have plotted all 4 of the underlying funds, with each fund having a particular color code attached to them. As one can see that year after year, different funds each perform differently, and hence the color ordering changes from year to year. This is one of the main benefits of a multi-managed product that gives you exposure to various styles and types of managers over a period of time and through a diversified portfolio. Year to date, the top performing fund has been the Nedgroup Stable Fund due to its high offshore allocation benefiting from the rand weakness and strong US and healthcare performance coming from some of its underlying stocks. Another stock that has contributed nicely to performance has been our holding in Sasol, that is up 10% for the quarter. The Prudential Inflation Plus Fund has been our laggard over the year to date and is down negative 0.4% for the period. This has largely been due to it having approximately 15% exposure to the South African property market. And as we know from earlier, the South African property market is down 22% year to date, which has had a negative knock-on effect within the fund. Finally, we look at the performance across asset classes. This slide sets out the performance of the Select Guarded Fund of Fund for the various classes of funds that one can invest into. We hope that you have found this report and fund commentary useful and able to provide you with some interesting insights into the fund.